Thanks for staying with us here on Joy News Prime. Increase in transport fares and surging food prices have pushed the rate of inflation for May 2022 to 27.6% from the 23.6% recorded in April 2022. According to the government statistician, Professor Kobna Enim, the rate of inflation for transport, household equipment, maintenance, housing, water, gas, electricity, food and non-alcoholic beverages are all higher than the national average. Kofi Eje of our research desk joins me in the studio. He has the data as released today. Kofi, run us through the figures.
Right, so Ernest, let me quickly go through the figures. So last month we were talking about 23.6% and we're saying that was too high, but this month we are looking at 27.6%. And this same period last year, inflation was a single digit and was around 7.5%, and this year we are having 27.6%. So you can see the upward trajectory in terms of the inflation figures. Now, if you compare Ghana to other African countries, so to Ivory Coast, South Africa, Kenya, Togo, and other African countries, you can see that Ghana's inflation is relatively higher than all the countries.
Way up there.
Absolutely. All the countries that we are talking about, here. And so let me take you to the market, and you can see that oils and fats has an inflation rate which is, just like you said, it's above the national average, 52%. Water, 42.4%. Cereals and products, 37.2%, and the rest follow. And so if you should also look at other products like bread, I love bread, it's around 41.3%. Bars, fares, and trotro, if you take trotro, you should know that prices have gone up 39.9%. Cooked rice, we all eat cooked rice. It's also
yes, my rice is getting expensive every day.
Yeah, and that's also around 32%. We look at herring, smoked herrings, that's 31%. Smoked herring, and that's amani, right?
Yes.
That's also 31.2%, and other products. But what effect does this have on your purchasing power? So this simply means that generally, if you were purchasing something which is 10 cedis last year, now you need, 12 cedis, 76 pesos to buy that same thing. If it is in the arena of food, you need 13 cedis. If it is transport, you need close to 14 cedis. If you are buying something that is 100 cedis last year, generally now you need 127 cedis, 60 pesos to buy that same good. And if it is in the arena of food, now you need 130 cedis. And if it's transport, you need 139 cedis. This is the at least situation that we are talking about here. And lastly, let me take you through this. We've been talking about fuel prices going up. So diesel has increased by 81.1%. Petrol here has also increased by 62%. And all these figures, most of which are above the national average of 27%.
No wonder transport is leading and driving the inflation rate. Kofi, thank you very much for bringing those figures to us and helping us understand. But Dr. Patrick Owusu is an economist at the University of Ghana Business School, and he joins us live. Doc, this is the second time we are seeing that imported inflation, for instance, is overtaking local inflation. What is really accounting for this?
Good evening and good evening to viewers. So we have seen in recent times the inflation around the world has gone up. So we have US and UK seeing record high inflations. So one reason why that would translate to imported inflation, imported items going up is that even if the things we are buying from the US, for instance, if the dollar price has gone up, even if the exchange rate is the same, when you convert it to CD, it's a higher price. So there's that side. But the other side is also that if you look at the currency hasn't been stable. So when the CD loses value, then anything that you are bringing from the US, even if the US price is the same, you see that the CD price will be higher. So mainly the fact that inflation in our trading partners is going up, and also the fact that the currency has been unstable. Those are major explanations for why imported inflation is picking up.
When the rate hit 19, when inflation hit 19, we saw the Bank of Ghana adjusting upward the policy rate. Do you foresee a similar measure following this figure that has been recorded for May? And you know that definitely has implications for credit, for instance.
Well, I don't think that we should see a rate increase anytime soon. Okay. So there are a couple of things. One is that when you increase the policy rate, its effect is not felt immediately. So even the 200 basis points increase we saw in March, usually it will take upward of maybe 2 quarters to 3 quarters.
Okay.
Before we see its full effect, go through the economy. So the first round of increment, we didn't see the full effect before at the last meeting, there was another increment. So I wouldn't expect that the Bank of Ghana will be in a hurry to raise the rates again soon. But the other thing is, I think the governor, in the recent interview that he gave to Bloomberg, admitted as much that the inflation, the current bout of inflation is primarily driven by supply side factors. So there's so much that raising the policy rate can do to fight that kind of inflation. So at some point, we have to deal with the supply side issue.
But Doc, just finally, before you take leave of us, are we simply helpless?
So I think from where I said to raise the rate again.
Are we helpless? Yes, are we simply helpless when it comes to reversing the trend? Because we've seen a consistent hike in inflation prices and it doesn't seem to be getting any better. Are we just helpless?
I wouldn't say we are helpless, but I would say that the main solution will be medium to long term. We are not going to get a quick solution to this. If the inflation was primarily monetary, then maybe the monetary policy rate will deal with it quicker. But the supply side things, it takes a while. So if you see that food inflation is really been the biggest driver between food and non-food. The food inflation has been the major driver of the inflation we've seen recently. And so part of that is that maybe the food items that we import have gone up a little bit, but a big part of that is also local inflation on food. Local food items have gone up. Usually that means that you need at least a planting season to address that problem. So some of the problems we are seeing with food inflation are things that, problems we had with the planting season and also problems with our food distribution channels and networks that have piled up. So those ones are things that we don't solve in the short term, in a couple of months. It take a while for those to be addressed. So we are not really helpless, except that we don't have a quick fix. It's going to take a while.
I'm grateful for your time. That's Dr. Patrick Owusu. He's an economist at the University of Ghana Business School. You're watching Joy News Prime. We're taking a break. When we return, we have the latest in showbiz.